Hey traders, checking in on the stock market today. Going to start off this video by going over a trade this morning that I fumbled, which means I had the direction right, I had the right idea, but I failed the execution. And there's a number of reasons that can happen, and I'll tell you why it happened for me today. Other than that, we'll check in on the broader market. Not a whole lot going on with a lot of our major names. There were some individual names with a lot of volatility out there, but there is a certain group of names that I'm keeping a close eye on for the next week if the broader market can continue grinding higher. I'll point it out. Let's check it out. So we'll start with checking out this trade, and it was with TLRY first thing this morning, and I was looking for a play off of the daily inside bar, and I'm looking for a daily higher low to be set. So viewing this as a low, high of a bullish earnings reaction, higher low, and looking for the momentum to shift a little bit. And not only do I like TLRY's setup, but I like other names in the sector. ACB is another one that has my attention. Entered a swing trade on ACB today. Just love the tightening range. Love the fact that the bears have been in control for a long time. And looking for the scales, which have been evening out as we trade sideways, looking for them to tilt. We have a triple top at 755. Daily inside bar, bear break with zero follow through. Break 755, and the scales tilt, and a weekly bounce is underway. So if the broader market continues grinding higher, I like these names for laggard bullish action. So knowing that, and after doing the weekend video looking at the sector saying I'm interested in the Canadian MJ sector to start this week, I headed into the morning saying, okay, TLRY, I'm watching for a play off of the low of Friday first thing this morning. And I'm looking at the drop first thing into 5-minute oversold conditions. I made an entry. We broke the low of yesterday with zero follow through. We broke 14.10. You got to look at it on the 1 minute time frame to see how it played out, because that's how close I was watching it. But we broke the low by 1 penny, and then this bounce started. And we bounced from the low of the day up a quick little 1% bounce. And so I said to myself, okay, I like the bear break with zero follow through, or a double bottom, however you want to view it. I made an entry right there, and I gave some wiggle room, and I used $14 as my stop. And then I stopped out at the low of the day. We bottomed out almost 1% lower, but then we shifted momentum notably throughout the rest of the day. It was just bulls recovering slowly, and then into the end of the day, getting some momentum. So, and then we closed at the high of the day, and it's now a triple bottom. We held 1388 with a triple bottom. So my mistake was using my normal size day trade position on TLRY and not being able to allow the wiggle room that was needed. So the wiggle room that I had was just over 1% before I would stop out. If I used 1388, it would be over 2%, and that would be too much risk for me to take on as far as that position size. So the remedy would be, again, this is all in hindsight, the remedy would be using a smaller position and putting your stop loss under 1388, and I would be in this trade, and I would be comfortably profitable at this point, probably up 4%. So this is having the right idea, having the right direction on where to look, at least for today's action, and failing to execute. And that is what makes trading so tricky, is getting the entry and your stop loss and your exit, getting that all aligned into a good risk to reward scenario, and then executing the trade. Pushing the buttons at the time when you're supposed to push the buttons is what makes this game very difficult. So, in hindsight, a couple things to learn from this. Definitely a little frustrating, but happens often. Not often, but happens, in a year. It happens a handful of times. So certainly not something new, just something you have to adjust from and learn from. And at this point, I'm still interested in TLRY, but we haven't confirmed an hourly trend change. We just shot straight up, and I love how the price action went today, and I still like these daily setups, but I'll be looking for an entry on an hourly high or low if we get it. I did make an ACB entry. We had a brief period of hourly consolidation, which allowed me a little bit more comfort to make an entry there, and ACB bulls have to follow through and break 755 for this trade to take place. CGC, real tight, multiple inside bars in response to earnings. And again, it's just a falling wedge-like pattern. And after bears have had complete control for months, we look for the shift, the balance to shift, where there's nobody left to short in the short term, there's no longs left to sell, and we see some bulls buying and some shorts covering. So bulls still have proving to do in this sector, but I'm watching very closely. And again, I like these names. You know, if I've mentioned that in the video last week that I am not comfortable being bullish SPY when the monthly chart looks like this. And I am not comfortable being bullish Google when the monthly chart looks like this, as far as looking to establish positions. But if you show me a chart like CGC, well, we broke out massively and we've pulled back massively, and anything above 1383 is a monthly high or low. I'm scouting a monthly bounce. And these are the same trades. It's the reason why I was scouting growth names, and I had one of my best swing trades this year was the monthly high or low entry on ARKK. And it's also the reason that I made entries on Bitcoin and Ethereum down at these lows, looking for the monthly high or low, which has now followed through nicely. So I'm looking for the same thing to try and take shape on CGC. I'm keeping the broader market, I should say CGC in the sector. And the sector generally heats up into the fall and towards the boating season after summer. We still got all August and September, but watching for the shift. And the broader market is still a factor. If the broader market drops in any meaningful way, this sector is not positioned well at all to hold up if that happens. We'll drop lower as well. We'll drop with the market. So we have to see SPY and QQQ continuing to grind higher or trading sideways and allow that rotation to go on. And hopefully people say, well, these names have run hundreds of percent. Maybe it's time to look at the names that have been consolidating for 5 months. So I've had successful trades with this style of monthly setup this year, and I'm looking for the same thing on CGC. And I also entered a swing position today on PENN for the same reason. Massive breakout to all-time highs, insane run of 3,000% plus. And now a 5-month pullback trying to bounce. I'm just looking for a bounce to look for a monthly lower high, but I'm looking for that momentum shift to take place. Earnings had a bullish reaction, and I'm watching for a daily trend change to try and confirm. So I entered an initial starter position looking for the daily high or low. If we drop down and see another drop, I'll look for hourly oversold to play a bounce, still scouting the daily high or low. I'll be less confident in the trade if we break the low of today tomorrow. But if we get a bull break of 74.87, the probability needle that our monthly bounce is going to take shape will increase a bit. So I like these monthly setups. They've worked for me well this year. When things are really extended, I find better risk and reward in these names, and that's why I'm focused on them for the next week plus, and we'll see how they shape up. So looking at the broader market, the S&P 500 holding on just fine. We broke the low. Let's look at SPY. We broke the low of Friday with no follow through. The most important level for me in the short term is the double bottom at 436. If 436 is holding, the bulls keep their complete control. If we lose that level, then it's definitely a red flag in the short term. And we'll look to weekly EMA 12 to be tested right after it if that level is lost. But for now, the bulls are just fine. And again, there's been many times in the last 3 years, really since 2017, since the Trump election, where bulls have just surprised me with their ability to just slow grind up. So even if I'm not comfortable in long positions on names that's monthly charts, whose monthly charts are extremely extended, I can anticipate the possibility we keep grinding higher. And if that happens, these are the names that I'm going to be comfortable looking to play bullish. I'm still watching for bear signals, but we don't have any at this point. So I'm not going to be aggressively going bearish unless I see some kind of signals. I can be uncomfortable bullish. Doesn't mean I have to be aggressively bearish. Looking at the NASDAQ here, daily bull flag possible. All-time high with no follow-through. But we've been holding the daily EMA 12 for the last 2 weeks, and it's still holding at this point. And QQQ, we will call anything above 362 a daily high or low. Bulls are just fine. Still watching a rising wedge pattern. And we'll draw that real quick. The resistance level I'm keeping an eye on. And really, it's the support level that's most important right now because we bounced off of it Friday and today. That's how I would draw it. And again, a bare break of this rising wedge may just mean we quickly set a weekly high or low. Certainly won't be game over, but it could show a short-term shift in momentum. IWM, these daily bull breaks Again, when I look at this, I see rising wedge because daily bull breaks lack follow through. And then you combine it with the most likely scenario of a weekly lower high forming compared to 233.64, and that gives it more validity to me. So I'm watching these little higher lows here on IWM. Anything above 217.10 is just another higher low. But if we lose those daily higher lows, our weekly lower high will be set, and we'll be looking back down towards the recent low of 209.05. So again, the positions that I'm looking for to establish bullish in PENN and ACB and TLRY, if we see any kind of broader market weakness, they are not positioned well. So again, those trades pretty much require slow, steady grind up if they're going to play out over the next couple weeks. Financial sector still staying a lead bull. All-time high is back in play. We are 1.5% from the all-time high from the high of today, I should say. Plenty of space where next time we consolidate, we're looking for a daily higher low compared to 36.12. The weekly time frame has clawed its way back, and it's a potential monthly bull flag. So if we get a new all-time high on XLF, the monthly uptrend remains intact. And even if SPY gave me, a monthly bull flag, that would make me much more comfortable. It's just the lack of any monthly consolidation in the last 8 or 9 months. Healthcare daily bull flag possible, inside bar bull break, daily EMA 12 support, and we're just looking at the all-time high, 134.47. We would have to lose our new daily higher low of support of 132.04 for weekly consolidation to take shape, and then we have the weekly EMA 12 as a multiple month guide. So daily EMA 12 and then weekly EMA 12 for our current uptrends. Biotech sector, multiple inside bars. So let's look at growth today. Today, big tech did nothing. QQQ went up, which means growth was going up. So just looking at NIO, NIO had a solid green day, and we've been back and forth the last 3 days. Thursday, solid day for growth. Friday, gave a lot of it back, and in some cases, we gave all of it back. And then today, big day for growth. So it's a bit of a shuffle back and forth going on, but just green, red, green. And it was NIO did that, and Tesla was very similar. ARKK, multiple daily inside bars, same pattern as XBI right now. We've got solar sector. Green stood out today after the red on Friday. We've got PLTR. Green, big red, big green. So a lot of choppy back and forth action as bulls are trying to come out on top in the short term in these growth names. And XBI, along with ARKK, multiple daily inside bars very likely to break tomorrow. We either bear break into daily consolidation or we bull break to try and keep weekly higher lows seeing follow through. A lot of these growth names have wide ranges on the weekly chart, and even if we see a green week, we may see tightening weekly equilibriums into September. The size of the pullback was more than a lot of these bulls wanted to see. From that high, NIO pulled back 30%. So I'm viewing it as a low, big bull move to a high, big pullback to a low, scouting a weekly lower high, and scouting a tightening range. And the growth bulls are just hoping that our weekly tops have not been set yet, because we need more bounce follow through to get into the midway points of these ranges from the pullback over the last month plus. Semiconductors, daily consolidation, still a possible bull flag. That's another trade setup to be watching for. AMD, we're scouting a daily higher low, daily EMA 12 support, hourly RSI approaching oversold again. Plenty of space for the daily higher low, just patiently watching for either hourly oversold for aggressive bulls to be scouting, or a big enough hourly bounce to anticipate an hourly higher low is then the most likely scenario. So if we bounce big, a bull can wait and scout an hourly higher low, playing off of that recent low to try and get in for an hourly trend change to dictate a daily higher low has been set. And SMH has plenty of space for a daily higher low as well. There are no red flags on this consolidation. TAN, daily higher low set, 85.21. Bulls need to break 90 for continuation of this move to try and see continuation of the weekly move, to try and see continuation of this monthly higher low. And again, if we look at the monthly retracement on most of these growth names, they have not made it to the 50% retracement, and they need to break the recent highs to get to that point. And Tesla's a good example where Tesla has a monthly equilibrium forming, and because we bounced so significantly from our monthly high or low, what was that retracement? I don't know. Let's look. Retracement of 65%, which allowed for a higher low to form on the next pullback. So if these bulls want to negate the possibility of a monthly downtrend confirming, we need another leg up. Look at the retracement on tan monthly. It's still a possible bear flag. It's in the gray zone here, up at a 40% retracement, but we need to get to that 50% retracement if we're going to start having confidence that a monthly high or low will then be the most likely scenario the next time we top out. MSOS sector has earnings all this week, today, tomorrow, Wednesday, Thursday. Trying to keep this slow bounce going, but again, bigger picture, bulls have a lot of proving to do because anything under 41.39 still over 10% away, just about 10% away. It's just a lower high. So Curaleaf had good earnings here after hours. They always put out good earnings over the last couple years. It's just a question of what the reaction is going to be. And if it's a bull reaction, we're not going to lose sight of the weekly lower high resistance. The VIX, bear break of the daily equilibrium to end last week. Still watching the bigger picture, weekly falling wedge. It's not in play. If we drop down towards 14, the support level will be in play, but not at the moment. And next time we bounce on the VIX, just looking for a daily lower high, anything under the double top at 2044. And again, next time we see XLV, QQQ, and XLF at the low of the day at the same time, which has not happened in many months, I will go aggressive bear on that signal. I will place stop levels, but that's an aggressive signal for me because it's been so long since that has happened. The dollar is on the verge of confirming a weekly cup and handle. Inability to break resistance, bull flag, and now we're testing that resistance. And again, if that weekly cup and handle breaks bull, it's a confirmed monthly trend change with a higher low and higher high, which is a 6-month equilibrium higher low forming in a pattern that's been playing out for 6 years. Key resistance test on the dollar this week. If we reject initially, bulls have plenty of space for a daily high or low to try and give it another test. Remember, natural gas gave us a daily cup and handle within a weekly cup and handle. The dollar has a possible setup where that could take place as well. Gold, big dump. You're going to be hard pressed to find a 2-day percentage dump that is bigger than what we saw Friday into Sunday morning. 7% drop. These drops look big, but they're not 7%. They're fairly close. Massive dump. With that, we are still holding monthly support, but I am out all of my metal swings. I had GLD and SLV in my IRA long-term swings. I've had exposure in them as long as I can remember, which means at least all of this year. I have added to them into weakness. I have sold them into strength. So my position size has fluctuated, but this drop and the 4-hour oversold bounce, I sold this morning anticipating the 4-hour lower high, and it was just enough for me to say, all right, I'm sick of looking at metals, really is what it boiled down to. But it's also my bull reasons for being in the trade are diminishing. And so I'm not just going to keep holding and give back my gains. I ended up, on the year, metals have contributed to 3.5% in my IRA, which in itself, isn't huge, but they weren't my entire IRA. So at times they were half of my IRA, they were a quarter of my IRA. So the positions themselves are probably up 7 to 10%. But I don't want to give that profit back. And it was a good experiment for long-term swing trading. And if gold can confirm a daily trend change from here, it's one step at a time. First, we have to confirm a 4-hour trend change. But if we can confirm a daily trend change from here, holding that monthly support level, I'll be interested again. And I have no problem buying higher as long as it means that the bull momentum is in my back and that trade is profitable right out of the gate. But really what it was is silver was a major factor here because silver just confirmed a monthly downtrend. After its massive breakout of 150%, more than that, we tightened up in a monthly equilibrium and it broke bear. I can't ignore that. That is a massive bear break. Same thing on the 4-hour, trying to set up a trend change, but then we just zoom out and scout a daily lower high. And I just don't like the setups anymore for the bulls. And I will like them again at some point. But not right now. Miners, big drop closing down at the low, 32.87 bear break. And only support from here is 31.65 and 30.64. So pretty much it's up to gold at this point. Gold has to hold monthly support, and that is down at 1676, which is 3.5% or so from where we stand. We certainly got real close. It's a double bottom at this point. And also what it was doing by me exiting these positions freed up the capital to enter some of these swing positions in my IRA, in PENN, and in ACB, and these monthly charts that I'm now keeping an eye on. So just a shift of focus. I'll be back someday. Still got some physical exposure, but done with those swings for now. And it's a sigh of relief. It's a nice just, all right, done with that trade, reset button, wipe the slate clean, and I like it. Oil, double bottom at 65.01, held it by 14 pennies, solid bounce, but it's just looking for a 4-hour lower high. If we can change the 4-hour trend bullish, wherever we top out, then we hold the low and confirm it, that would make that double bottom more convincing. And it's bulls fending off a weekly downtrend and fending off monthly consolidation at this point, but it's not convincing yet. Need that 4-hour trend change for us to say, okay, maybe we can hold this support and continue tightening up on the weekly. Natural gas, keep an eye on natural gas to follow oil. It followed oil on the way up. Little toppy here. We broke resistance without a ton of follow through. Double top at 421s. Daily EMA 12 still holding. Again, there's no red flags. The only red flag is a bull break with a lack of follow through. And oil and other commodities, the metals, dropping notably. So daily support is 3868. Real aggressive bears are scouting some top fish plays at these levels. We haven't seen weekly consolidation since going 30% plus. So just keeping an eye out for the potential of bulls to lose some short-term momentum. And we're certainly already getting some red flags in the energy sector as a whole, led by oil. Here's the energy sector, potentially a weekly bear flag. So we'll see if natural gas, after following oil on the way up, follows it on the way down. So that's where we stand into tomorrow. That's all I got to say. Do good things. See you next time.